Hi, and welcome to the final Meet the Expert session for the year. Everybody's always keen to know where property is headed, so for this month we're joined by Rob Walker, who's Director for Perth Property Partners. So Rob, just give us a rundown of your business and areas you specialise in and things like that.
Thanks, Justin. Yeah, Perth Property Partners, as the name suggests, we partner people with their real estate decisions. We provide advice to buyers in regards to the strategy and the asset selection when they're looking at investments or their principal places of residence. We also help review people's portfolios. Often people want to have a bit of feedback with regards to whether a property is worth holding, and also we have a service where we help people sell their property.
Perfect. So Rob, as we head towards Christmas, how's the Perth property market been for 2015?
Yeah, sure, Justin. Look, the market has certainly been a declining market in Perth. It's very much good news for buyers and not so good news for sellers. Since the start of 2015, the median house price has dropped from $550,000 and is likely to bottom out below $525,000 by the end of the year. What we're seeing is that stock levels are rising consistently. This time last year there was 13,000 properties on the market, and that's increased 3,000 over the last 12 months to over 16,000 properties currently listed for sale. And combined with that, the rental market is certainly also tanking out, with 9,500 properties up for rent at the moment, which is an increase of 3,000 from last year also. So we're seeing vacancy rates increasing and rental prices dropping. So in summary, in Perth at present, we've got very much this buyer's market, we've got supply and demand issues developing, and very much a declining market. The good news, Justin, is that property markets are cyclical. Just as much as Perth is a declining market, Sydney and Melbourne is at the peak of their market. So the question for buyers, are you better off buying at the peak of a market, or are you better off buying at the bottom of a market? And there's risks really associated with both.
Yeah. So moving on from 2015, what do you expect for 2016?
Sure. The brakes are really on at the moment in the Perth property market, but there's certainly an opportunity to grab a bargain out there. There's very little competition, and prices have been reduced. So what we find is that at the bottom of a cycle, there's very much an opportunity for counter-cyclical investing, and that is where you're going against the stream of what others are doing, which is often a better practice than waiting for the good news stories to come out and missing the boat.
Yeah, absolutely. And Rob, what areas do you think show more promise?
Well, I certainly, if I was in the property market right now looking to invest, I certainly wouldn't be looking at an off-the-plan development where you're sort of locking in a price and settling in a year or two when you're really not sure where the market, how much more is to fall in today's market. I would find that a better strategy would be to look for subdivisible property, something which is perhaps potentially being rezoned.
Yeah.
Some of the councils around the Perth metropolitan area have got some proposed rezonings going through, and opportunity to grab something on a larger block with an older house, with the opportunity to value add by creating 2 or 3 properties out of the one, I think can help in this particular climate. I just wanted to provide you a bit of an example of something that I assisted a client that bought back in 2012, and this was an example of a subdivisible property, and in this particular case we had a first home buyer that wanted to buy a property and was looking to step through a subdivision. So we found a particular property in Doubleview, and this property had a laneway down the side, an opportunity to cut off a rear block. And just to give you some numbers around this development, as I said, back in 2012, the purchase price was $750,000. The time all of his in costs were added up, which included stamp duty and subdivision costs and some renovation costs, his total outlay was $850,000. But in recent times, he sold the rear block for $440,000, and I've just valued the front house at $700,000, which means when you add all that up, he's basically created a close to $300,000 or $290,000 equity gain in 3 years.
Yeah, nice.
And one would ask, well, is that because Doubleview's done really well, or is it because of the strategy? Now, what I can say is I did a little bit of homework to see what else had sold in Doubleview during that time. And pretty well at that exact time, I found another property that sold for $700,000, and just recently sold for 800,000. So your time you take their stamp duty and selling fees out, that's about a $56,000 gain for that investor, as opposed to the $290,000 for this particular investor. And then I thought I'd go further afield, and one of the suburbs that's probably renowned for not having performed so well over the last 5 or 6 years is the Rockingham Mandurah area.
Yep.
So I looked for a little example down there, and I found some other investor that had bought something for 875,000 and sold it just in October this year for 690, which the time you factor in all of their fees, that's a $234,000 loss.
Yeah, ouch.
So when you say a $234,000 loss and a $300,000 gain, we're talking over a $530,000 turnover in discrepancy. So,
Yeah.
so I guess that's a huge loss for an investor and an expensive lesson, but it does show that you're making your money when you buy.
Yeah. And what tips can you pass on to those who are looking to purchase property in the next, say, 12 months?
Well, what I did is I've actually tried to, there's lots of tips I could pass on really, but I tried to narrow it down to the top 5 that I'd really consider as important for any investor looking to go into property in this market. First thing is entity. I think that it's one of the things that I see a lot of people do is they don't actually get the entity right. Yeah. And you can't rewrite a contract. So getting the advice at the start in terms of what's the best entity can save you costing extra stamp duty, and it can also save you a lot of tax and increase your returns in investing by getting the entity right at the beginning. So talking to your planner and getting that advice is crucial. Second thing, as we just saw, I guess, in that last example, is the asset selection is paramount. Location is certainly one of the most important aspects of asset selection. Finding properties that are in strong demand, where they are going to appeal to a wide range of demographics, and traditionally located in good precincts, either be that a good educational facility, cafes, coast, river. Asset selection is really very important. Doing your homework. When you go and buy a property, it's so important to do your homework. You're better off to miss a property because you weren't quite ready than to make an expensive mistake. And as a property buyer, you really have 2 tools, and that is education and knowledge. Now, if you don't feel that you have the right tools to transact in property, well, it's important to find a mentor or a coach that can help you through that process. But there's a lot to know. I constantly see people who said, I didn't even look at the certificate of title, I've got no idea where the sewer line runs, or I didn't actually follow up with the council about the rules where I could get tripped up here. And so don't make an expensive mistake by not doing your homework. Tip number 4 is don't overcommit. It's not a market where you want to be fully overcommitted. You need to be able to ride out the storms. Property, as an investor, there's going to be times of high interest rates as well as low interest rates. There's going to be times of property having good increases and times when it perhaps can be in a slump. So my tip is make sure you have the buffers in place and you can ride out the highs and the lows. And last of all is investment strategy. I think it's better off to plan and get the right strategy at the beginning, and then the property will evolve out of the plan. So get the right property at the right price with the right advice.
Yeah. So with cash rates very low and the share market once again showing extreme volatility, I know a lot of you over the Christmas period are going to be reflecting on your finances, and especially going to be going back to property and going, what can we do within the property space over the next 12 months? So if you're going to have that discussion over Christmas, give myself a call and we can go through the strategies, or even call Rob direct at rob@perthpropertypartners.com.au or on 9385 7303. Thanks.